Hey, what's up, everyone? I wanted to jump in on this video call with Ryan really quick because I want to have a discussion with him about a question that I'm sure a lot of you guys may have, but that I continue to get as I'm taking people out to see houses. As you may or may not know, the real estate market in San Diego is insane right now. Houses are selling for way above asking price in a very short amount of time. So a lot of the buyers that I'm working with, and well, I wouldn't say a lot, I would say some of the buyers that I'm working with, or their family members or friends, or just people that I talk to in general, keep asking me, hey, do you think that what's happening in the economy due to COVID is going to affect the housing market? More specifically, are we going to see a lot of foreclosures because there's a multiple amount of there's a lot of businesses that are either closing, downsizing, or they're laying people off, or just furloughing people. And I, in my opinion, don't think that's going to happen. But I also wanted to have a second opinion from somebody that I work with, Ryan Ponce, who's here on this video with me. So Ryan, I'm going to ask you the same thing that people ask me. Do you think that the effect that COVID-19 is having on the economy is going to create an overflow of foreclosures in the near future? Why or why not?
So I don't know. I don't have a crystal ball. Oh, sorry. Hold on. Technical difficulties. I've got another phone call. I don't have a crystal ball, and I wish I did. But I do get the same question, right? People want to know: are there going to be foreclosures? Are there going to be short sales? They want a deal, right? That's usually why people are asking. And first off, I want to touch base with the word foreclosure. People use it as like a deal, and like they think of it as, oh, we're going to get a deal. It's not necessarily a deal, but you also have to remember what a foreclosure is. It's someone losing their house. Like, we don't want foreclosures. We don't want short sales. It's people losing their homes. There's people behind that. So that's the first thing I want to touch base on. Do we need more inventory? Yes. Is there an inventory shortage? Yes. But do we necessarily want foreclosures or short sales? Those are people that are affected. They're in distress. They're selling. They're losing their home. So the answer is no. We don't want that. Do I think that there's going to be some? Probably. But you and I talked about there's a chart by Keeping Current Matters, and I'm gonna share my screen for a second. And this chart shows out of all. What was that?
You're stealing my thunder. I was gonna talk about that, but okay.
Oh, well, then you talk about it. Go ahead. Go ahead.
Go ahead.
No, I was just going to talk about what this chart is, but go ahead and explain what the chart is.
You literally just copied my homework. I told you I was going to talk about this, and you just It has my name on the bottom, dude.
No, it
doesn't. Anyways, go ahead. I didn't want to interrupt you. Go ahead.
So what this chart is saying is active forbearances, people who aren't paying on their mortgage right now. As many of you know, the banks were allowing forbearances and allowing you to delay your mortgage payments. Let's be honest, that money is going to be due at some point. Whether they add it onto the end of your loan, or they demand a lump payment, a balloon payment, they're going to want that money at some time. But out of the people who are not paying their mortgage right now, about 77% have at least 20% equity in their home, meaning that if they need to, they're able to sell. Now, do they want to? Maybe not. But at least 20% equity, meaning that people have a built-in savings account essentially in their home. And if they needed to tap into that, they can. That puts about 23% with less than 20% equity. But as you can see, not very many people have negative equity, and not very many people have less than 10% equity. So only about 10% total between those two categories.
Yeah.
So I just don't see foreclosures necessarily. Now, will there be distressed sales, people that need to sell their home because they can't afford to pay their mortgage due to job loss or taking care of family or something? Probably. And those people will either end up renting or maybe buying something a little less expensive. But the good news is most people have equity in their homes.
Yeah. No, so see that's a big part, and I just want to stress the first thing you said of you know, nobody wants to see foreclosures, right? Not just for the simple fact of oh, that would be a good opportunity for us to get a house at a discount. It's somebody losing their house, and banks are not in the business to foreclose either, and that's a big part of this whole thing, right? So when this whole COVID thing first hit, I was one of the people that called my bank and right away started asking for ways to protect myself. I didn't know what was going to happen. I didn't know how my business was going to go during COVID. You know, the first couple of weeks, showing houses was illegal for us. So that's my source of income. I was concerned about how I'm going to pay my mortgage. So I called my bank, I had that discussion with them, and I bank with Chase. And luckily, they explained how forbearance is going to work was going to work for me. Thankfully, everything worked out in my favor. I didn't have to go through the process. I was able to pay my mortgage every month without a problem. But some people didn't, and some people still haven't been able to do that. So my number one advice for people that are currently going through that is call your bank and ask them for options. Every bank's going to be a little bit different. Every bank's going to approach you a little bit different. And I feel that they're going to try their best to try not to foreclose on people and rather just work with them in some sort of way. Besides that, you know, when the government rolled out the CARES Act, it clearly states on there, the first forbearance was good for 180 days. And then it allowed homeowners to file for an extension of an additional 180 days, which brings you to 360 days. Hopefully, you know, this health crisis with COVID-19 begins to get better and people can get back to work, which we've seen, you know, from beginning of COVID to now. I think some people have been able to either get back to their original work or be able to find something else. And the ones that didn't, up until last month, they were getting an additional $600 a week on their unemployment check. You know, so there's things to assist people that are struggling with COVID. I know it's unfortunate, but there's ways to work around it. Hopefully the extension of the forbearance is going to help people kind of ride the wave and get to a position where they can continue making the mortgage payments. The second reason why I agree with you is the amount of equity people have on their homes. This is a very, very different scenario than what happened back in 2008. I think when people start talking about foreclosures, short sales, they immediately revert back to what happened in 2008 when everybody was walking away from their homes. Well, the reason why we were walking away was because they were upside down on their mortgage. They owed a lot more money than the home was worth. Right now, it's a little bit different. Most people have some money on there. They're not simply going to walk away and leave 20% of a $500,000 home just sitting in a house. You know, they'll find ways to either refi out of it or like you said, you know, do a distress sell and go figure out perhaps rent with the money that they take home while hopefully the COVID crisis passes.
I will say lending guidelines have been a lot more strict in the past 10 years. And especially right now, the lending guidelines are a lot more strict than they were before. Yeah. 2007, anyone could qualify for a mortgage. They were literally handing out free money. And now, as you can see, I'm moving right now. This is not my Zoom room, by the way. But we're buying a property, we're buying a house, and the amount of paperwork that you need is insane. Like I'm going a little crazy. Granted, I'm self-employed, so there is more to it than just a typical W-2 employee. But it is, you know, the guidelines are pretty strict, and they have been for a while. So they're not just giving out money to anyone that has a pulse. Mm-hmm. So I think that is an important topic. The other thing I was going to talk about, though, is the market in general right now is insane.
Exactly. So people are just going to walk away from a house that they can make money on.
They could easily sell. I mean, if you have a single family home right now, a detached home, even a condo or a townhouse, you know, in certain price points, it is insane right now. I mean, I'm going to pull up a graph right now from InfoSparks, and I just want to show. This is San Diego County. This is the average sales price, and this goes back all the way to January 2004. Okay, So this is the crash, and we've been steadily growing for the last over 10 years. But this is the last 2 months. It went from 822 average sales price on a detached home, though. I should specify that, not everything,
Hmm.
all the way up to 948, 900 essentially. So, I mean, people are looking for space. They're looking for yards. They're looking for a change, and there's a lot of activity going on in the market right now. If we look just 1 year back, I mean, look at that jump just in a couple of months. And this is San Diego County. This is everything. So this is condos, townhomes, detached, everything. I mean, look at it. It went up to 789. Um, let's see. In July of 2019, we were at an average sales price of 697, and now we're at 789. So that just tells you, I mean, the demand is insane. And if you look at pending sales, that shot up. So these are the amount of properties that are going into escrow that month. July, we had 4,091 homes go into escrow
Right.
under contract.
Right.
Versus April, which was, kind of the peak of the effects of coronavirus. We couldn't show property. There's a lot going on mid-March through mid-April, essentially. 1,881 deals went into escrow that month versus 4,091. If you look at the solds, it's up as well. It's probably going to be even higher in August because things that go into escrow in July typically close in August. But let's look at the dollar volume. So this is the amount of real estate that sells in a given month. The dollar volume of real estate that sells in a given month. $2.77 billion, $2.78 billion traded hands in July in San Diego County. That's the highest that we've seen.
Yeah.
Going back to January 2004.
Mm-hmm.
I mean, there hasn't been a month where we've seen more activity than in July 2020. So it just tells you that there's just a lot of activity, a lot of pent up demand. So even if people are forced to sell, they're going to be able to find a buyer. Now, there's certain markets that are a little bit slower than others. If you follow the news at all, they've been talking about urban, the change between urban to suburban to even rural, that there's more demand the further away from urban areas now. And it just kind of shows you the sign of the times, right? People are looking for yards, they're looking for space, and they might be moving out of areas like downtown in order to get that. But I think that it's going to come back strong once it's able to.
Exactly. It's a lifestyle, right? Like that's
Yeah.
what people that live in the city are missing. And some people aren't willing to wait however long it takes for COVID to go away and people to go back to enjoying restaurants, enjoying the nightclubs, enjoying just being outside in the city. Although if you go around Gaslamp or Little Italy on any given evening or weekend, they haven't missed a step, man. They've adapted pretty well. And for those people that feel comfortable going out there, I think it's as close to normal as I've seen anywhere else.
Yeah.
But just going back to like the question that a lot of people are having is, do you see foreclosures like a lot of foreclosures coming in the future? I agree with you. I think there will be some, unfortunately, but I don't think there'll be an overflow because of the two reasons that we just talked about of, the support that the government and the bank are providing for homeowners with the forbearance and being able to extend, as well as home ownership having the amount of equity. Pull that graph up again. I don't know if you pointed out, but 59% of them are at least at 30% equity. So do them, and then just to kind of clarify what equity is, pretty simple is the difference between the amount that you owe for your house minus what the house is currently worth. So the gap in between that's how much equity you have. So if you were to sell, you subtract the fees for selling, and that's how much you get to take home. So if we do just simple math for $600,000 home, let's say, times 30% equity, you're talking about $180,000. I don't know anybody that would just simply walk away from that. They'll find a way to either work it out with the bank, or like we said, potentially do a sell where they use that money to go somewhere else.
Mm-hmm. Yeah,
Right?
I mean, and I really do hope that this is under control as far as the number of people who are unable to pay their mortgage and everything. That's the one. I guess that's the one question mark is what what is the long term. What is the long term? What does the future look like
Right.
in the job? The job sector is like what's going to thrive, what's not. I think that's the biggest question mark right now. But
Yeah.
I know downtown San Diego is trying to add a lot of tech jobs. They're building tech office space. I also know they're trying to build bio biotech office space, life science office space, and so they're really trying to bring jobs downtown. And San Diego's also been a huge life science hub, biotech, and then obviously military. But and that's the other thing too is a lot of San Diego. Not I don't know the exact percentages, but a lot of people in San Diego are in the military, and military is still. I mean, that's job security. So yeah, I'm not sure what the future looks like, but I don't see a lot of foreclosures.
Yeah, I agree with you. So there you have it. That's just our opinion based on the stats that we follow and kind of the reports that we read, the people that we talk to. So I'm sure it's been across your mind. If you would like to have a further discussion as to why you still believe there might be a good amount of foreclosures coming to the market, happy to jump in a one-on-one call and give you more insight as to where we're getting this information from. And if you have something different, I would love to hear it. I we kind of joke about this where we like to be proven wrong because then that means I learned something. So if you have something that we're missing or something that we're forgetting to mention as to what can cause more foreclosures, I mean, please feel free to either call me, text me, or even comment wherever you see this video posted. All right. Thank you.
All right, bye.